Here we go. We are on. Morning Facebook. Hope you are doing well. Let's go and have a little Wednesday market scan. We didn't do one last Wednesday, did we? I think it was on Thursday we got the video out. Let's go and have a little look and see what's going on. Interesting here. So we'll start with the S&P futures. So we'll look at the daily chart. What you'll notice here, if I just go to the weekly chart, is we are hovering around the previous highs of the 31st of August. So we're sitting hovering around that level. We're not seeing any real divergence here on the MACD between these levels. Not seeing divergence coming in either. So we're just hovering around this level. We did establish a short last week because we came into the level and it met our short setup criteria for what's known as our IR240 strategy. So we are short currently. Our stop is above that high. But at the moment, what you'll notice if I just go down onto the daily chart here is you'll see that we pushed up slightly higher. So we had a close above on Monday. Yesterday we were pushing down and we bounced back off that resistance level and we're just sitting around there. So not a lot happening at the moment. The Dow, very similar. Now, interestingly, and I don't see this a huge amount when I'm analysing the indexes, is that the Dow is not necessarily leading the S&P, but the Dow actually went higher, got a test of the previous highs. So similar price action here yesterday, looked as though we were coming back down, but have bounced off that level. But the major difference here that I'm noticing is that the Nasdaq, in terms of its short-term position, you can see, although the candles are doing a similar thing, very small, very tight over these last couple of days, the Nasdaq has not come and retested its highs. It's slightly further away, hasn't got above its level. So the Nasdaq is not really leading the other two markets, either pushing down ahead of those markets or pushing up past that resistance. So we're not seeing the Nasdaq lead the way, which it doesn't do all the time, but it does do quite a bit. You can see the Nasdaq ahead of the game, but not here. So Nasdaq just sitting in this little tight range, sat in between its 5 high and 5 low, and it has been there, what, 1, 2, 3, 4, 5, 6, 7, nearly 2 weeks. So we'll see what happens over the next few days. So not a lot to report there on the indices. Oil, as I said last week, we had a nice monthly trade on oil, but again, we came up high here on Wednesday last week, and since then, again, we're sitting in between the 5 high and the 5 low moving average there. We didn't get a retest to the highs. For me, on this particular market, on oil, what I'm looking at really is we've got a sideways move here. So for me to have any upside momentum, I would need to be above this previous resistance here. So upside momentum for me would be a break of this level. Now, I wouldn't trade a break of that level, but if price was to get above that and show me that it wants to go higher, then I would look for possible long trades in there. But the move up would have to be enough, and the candle patterns would have to show that that's enough of a move up rather than just a spike up through here. So that's the difference between a move up there versus what we're seeing on the S&P. Now, if we came up and retested this level and pushed down, there could be some short opportunities, but I'm less inclined for those simply because of the size of this range here. For some of our day traders, that smaller range will present a good opportunity up at that level, but we'll see. So oil fairly range bound, you can see there. If we go and have a little look at gold, here's a daily chart of gold. So some of our guys are short. We talked about this before. We had almost a test of the target. So the short entry was up at this point here. Almost had a test of the target off the election. I say the election, the move post-election that you saw there on the 9th. But what is key here is whether or not we are going to come down, get to this level. And this is where the psychology, and I don't normally talk about this much on these commentaries, but this is where the psychology of a trader is key. Because you've had the trade, you've entered the trade has gone up, you've taken a bit of heat, then you've had a big move down, and here you may or may not have got taken out of the trade. Now, I didn't take this trade on gold because I don't swing trade gold. Okay, so I don't swing trade gold. It's not one of the markets that I've tested or I have on my list, but some of our guys do. So I know for a fact that getting this close to your target and then coming back down again and then pushing up and then going into a sideways move here That's where your mindset gets tested. It's all well and good taking a trade, and it's all well and good following the process, but when you get that close to your target that quickly, and then you're sitting sideways, that's where the mindset and having the discipline and being able to stick to your rules is key. All right, so some of our guys are still short on gold. Outside of the trade, from an analysis point of view, this level here remains key. If we were to get below this level, then there could be short opportunities down towards the weekly 50, which is sitting around 1746, so around this level here. So there's a window of clean air down to that level there. To the upside, I would want to be above this level. So essentially, if that was to come up and stop the guys out that are short, then there could be some long opportunities back up for a retest for the previous highs there. So as you can see, with a lot of these markets, we're sitting in quite a sideways position at the moment. Let's go and have a quick look at silver, see what silver is up to, see if much has changed. I doubt much has changed, and yes, you can see there, silver's tightened up even more. The range is very tight, and as again, look, 1, 2, 3, 4, 5, 6, 7 odd candles sat slap bang in between the 5 high and 5 low, not making any move above or below. Same thing with silver. For me, it's slightly more staggered here with silver. A break of this low would not give me enough clean air before this low, so I'd want to see price below this level before I would look for a clean air spot down to 19,929, I think, on that one there. I'm just looking. Yeah, so a bit of a small space, but possibly a small little window in there. It's quite tight. Upside, break of this level, and then you've got really into this area here. So a little bit of upside clean air there, a little bit downside clean air there, but in here, from a swing point of view, not a lot there. Now, some of you might be looking and going, well, hang on a minute, the distance between here and here is fairly big. Well, relative to how you trade. So it might be that if price was to get outside of this little zone here, as a day trader, you could find some moves in there down to this level. And as a day trader, you could find some moves in there. But as a swing trader, those gaps simply won't be big enough based on the risk to reward. So the gaps and the clean air areas that I'm looking for as a swing trader are going to be much bigger. So remember, I'm coming at this from the basis of a swing trader, not a day trader. All right, so you have to bear that in mind. Right, let's go and have a little look at euro. So starting a little look at the currencies. So euros again still in this range. So this is where there's a lot of intraday opportunity, but as you can see on the majors, the swing opportunities are a little less. We've only got one trade out at the moment on all of these majors. And this is another reason why we trade cross pairs, because when we get scenarios like that, it gives us more opportunity if we can trade cross pairs as well. But again, euro would be looking, because of the move up here, would be looking potentially for a reversal up on a retest to this level if everything works out accordingly. If not, and price wants to go higher, then the next level of resistance, you actually can see we've got a zone up here. But what we've got, if I take the bottom of the zone up, is you've got these highs here. So actually with euro, plenty of opportunity, possible reversal here, be a slightly lower risk one, because this isn't a clean area of resistance, but it is a retest of the highs of this year. If that wasn't to set up, then we've got all of this room here for, with the trend trades, be it pullbacks or breakouts, up to a retest of the 2018 highs. And then the downside element of it is between here and here. So if we go down to 1.13, so there's a bit of clean air down towards the weekly 50, and then below that, there's plenty of room there. So again, we're stuck really in these zones here, which don't help us as swing traders, but as day traders, some of these zones actually work out, and there's plenty of clean air for you as the day trader. Quick look at pound, US dollar. We'll go and have a look at that one. Now, you'll see here, if I just go in here, we had the short trade entered here, didn't get the same momentum as we've had on some of the other trades. So I think if we take that high out, that will be a stop out up at this point here. So that's where the stop is on that trade. So if we take that high out, I would be fairly certain of a stop out on that. That's okay, because I think we have 4 winners, and if gold and pound don't come in, that will be 2 losers. So at 2-1 on these particular setups, these what we call reversal pullback setups, 4 winners at 2-1 versus 2 losers, then I'm happy with that on those. So we'll see. I didn't take gold, so for me this would be one loser if this trade comes up and stops me out at that level. So I'm more than happy with that. So yeah, that's looking unlikely. So it's looking more and more like we're going to get back up here, and then what that would offer up at this level, if I just pull the weekly chart up here, that would offer a potential short trade at that interim resistance, but again a lower risk one because we're not as extended. And then what you've got, if we get above that level, again, is clean air for momentum trades, and then your reversal trades up at the 218 highs. So possible reversal trades here, but slightly lower risk because you can see the market isn't as extended as where it's been before. If that doesn't, and price, if that sets up, then you have potential moves here back down into this little zone. So a little reversal trade there. If price goes higher and proves that it wants to go higher, gives you a new high, pulls back and goes again, then you can look for momentum trades in this clean air window between here and here. Targets would be up here, and then you'd be looking for reversals up here. So if from the upside point of view, that's what we'd be looking at. Downside point of view, really I'd want to be below here before I had too many momentum based trades. So again, this is just going through the indices and the major currencies, and we do this as swing traders across all cross pairs that we trade, and looking at the what we call the overall market position. So once you establish where the overall market position is, then you can start to look for certain trades relevant to that, and all of our strategies are relevant to certain market positions. So for example, on the swing side, we have the against the trend market position, with the trend market position, and then what we call trendline break market position. And what we have is we have two strategies specific to that condition. So what you're doing is you're matching up the proven strategy with the market condition, right? And that's key. And as a trader, what we do, people come in, they will focus on one of these areas first, and then they will move into other areas once they master them. So there's no right or wrong way to start. There's nothing wrong with going in as an against the trade trader first. In fact, we was talking to one of our traders in the room last night, Matt, and he only trades against the trend. He's got one of our strategies that he runs and one of his own. But what he does is he makes sure he only trades against the trend when the overall market position, so he only trades one of his two strategies when the overall market position suits that. And that's exactly what I'm talking about here. If you're clear on where your levels are and clear on where you will trade that, it's not a guarantee that the trade will win, but as you can see here, an against the trend position here, but you would take a lower risk position because it's not as extended, with the trend between here and here, and then against the trend up at this level here. So I'm not going to trade against the trend unless we reach that level or we reach that level. If price proves itself and goes higher, then I'm only going to trade with the trend between here. So if you're an against the trend trader and a with the trend trader, as some of our swing traders are, then that may give you more opportunities on this particular market. If you're just a with the trend trader, you're waiting for price to see if it will get into this position. So being able to analyze the overall market position, regardless of the type of trader you are, whether it's against the trend, with the trend, or both, that's the key skill. And that's the key skill that we teach you on the Kickstart in week 1, is how to get your levels right and get your overall market position right. And then in week 2, we start building in the strategies, all right? So those of you that are keen, I know we've got a lot of people already registered for our Jan Kickstart. Those of you that are keen, check out the link on the Trader Support Club website so you can get booked up and you can get one of the last places available for that. Good. I think that's pretty much it. I'm just going to, before we finish, just have a quick look at US dollar yen, see where that is in relation to its levels and its overall market position. So you can see, again, a little bit sideways, crisscrossing this particular level. So if I jump up to the weekly, for me, you can see here, there's the lows from COVID. Now this makes it a little bit tricky, but there is a window. If we take out these recent lows, there's a nice window between here and those lows. And some traders would choose to ignore that spike. I would still pay a little bit of attention to it, especially as a target. And then with the trend either between these lows and that low, so that would be with the trend, and then possibly a with the trend trade in here, and then against the trend down here because that's back down at the 2016 lows. So again, looking at the overall market position, you can see I've got my trend line in there. That's our other condition, a trend line break. So again, nothing here. So at the moment, a lot of waiting and seeing what price will do. A couple of markets that we are keeping a very close eye on at the moment. The first one here is New Zealand dollar, US dollar, because again, you can see we've got a interim resistance level here, not a strong one. The stronger one is higher up. It's up at this level here. So we could be looking for a lower risk against the trend trade here, and then another against the trend trade here, but if price proves itself with the trend in here. So this is on our radar at the moment. If price can get into this shorter term resistance that you can see here, and similar with copper. So even though you can see that a lot of those majors are sideways, there are still other markets that are moving in. So you can see here, here's copper, and I'm looking for a retest of the 2017 and 2018 highs. So we could have some additional trades very soon, and if we get into those, then we'll review those next week. All right, I'm going to call it a day there. Hope that was useful, guys, and I will be back with you again very soon.